Welcome to the July Roundup Report. I'm Alan Oster, NAB's Chief Economist. Well, the Reserve Bank held rates unchanged at 4.5%, which has given homeowners some respite. I think really the bottom line for the Reserve Bank is they're still concerned about what's happening in Europe and what that might mean for essentially the Australian economy as we go forward. In terms of a lot of the talk about double dips, recessions, I think essentially that's not very likely. The Reserve Bank is emphasising the importance of the Asian economies, which is still very strong. In terms of the Australian economy, we still think it's around growth rates of 2.75%. Overall, the retail sector looks a little bit weaker because essentially people are feeling a little bit nervous and equity markets are down. So in terms of the banking sector, deposit rates are still very good, very attractive for homeowners out there in terms of putting deposits and saving. And in terms of house prices, I think essentially the bottom line is that they're going sideways at time. Overall, as I said, growth I think is around 2.75% to 3%. And in terms of interest rates there, I think essentially rates are on hold for about 3 to 6 months while the Reserve Bank figures out what's happening. However, we would expect at the end of the year that rates would go up to about 5%, so another 0.5%. The other big issue, I suppose, over the course of the last month has been the mining tax. Without getting into the ins and outs of it, my bottom line would be at least it's cleared up some of the uncertainties. And so generally, that is favourable for investment in the near term. So overall, I think basically the bottom line is the economy is still doing fine. The Reserve Bank sitting around waiting to see what's happening in the global economy and whether we've had some of this temporary weakness is going to continue or not. Well, this has been the Roundup Report with Alan Oster. I look forward to seeing you again in August.